Hello traders, you are welcome back to the Forex Geek channel. In this video, we are breaking down an extremely powerful trend trading strategy, which is the ADX and EMA strategy. So this method helps you filter out weak markets and focus only on high probability trades. Make sure you watch till the end because I'll be sharing some important chart examples to help you master this strategy, okay? Many traders struggle with false signals and weak trends. That is where the ADX and EMA strategy comes in. Let us add the moving average to the chart. We're going to be using the 50 EMA. So the 50 EMA helps us determine the overall trend direction, while the ADX tells us whether the trend is strong enough to trade. All right. So while the EMA gives us trend direction, the ADX gives us information about the trend strength. Okay. EMA for trend direction, ADX for trend strength. So by combining these two, we can avoid choppy markets and focus on solid trade opportunities. Now let's go step by step on how to use this strategy. First of all, we need to determine whether the market is in an uptrend or downtrend using the 50 EMA. If the price is above the 50 EMA, we only look for buy trades. If the price is below the 50 EMA, we only look for sell trades. This keeps us on the right side of the market. The second step is to confirm trend strength with the ADX. So the ADX indicator, the default setting is what we're going to be using, default 14 period, right? So the ADX helps us measure the strength of the trend, okay? If the ADX is above 25, you can see currently it's around 27 point something. If it's above 25, the trend is strong enough to trade. Currently, we are in a sell trend. The EMA has confirmed that this is a sell trend. And because the ADX is above 25, it means that this sell trend is strong enough to trade. If the ADX is below 20, the market is weak or ranging, so we should avoid trading in that situation. So this step prevents us from entering low momentum trades that could lead to unnecessary losses. The third step is to wait for a pullback to the EMA. Instead of chasing price, we wait for price to retrace back to the 50 EMA. For example, here, you can see price came down, price retraced back to the 50 EMA, and then continuation. You can see that the ADX actually confirmed this move. Can you see? The ADX was above 25. It crossed above 25 around here. So this would have been a good place to enter a sell. Set stop loss above the previous swing high. Take profit level can be around support zones. You can see with a good risk to reward ratio. All right. So when you wait for price to retrace back to the EMA, it gives us a better entry point with lower risk. Because if you jump into the sell, maybe around here, you are entering the sell trade at a lower point compared to if you had entered when it was up at this point. Same here, instead of jumping to the trade, to the sell trade around here, you'd have probably waited for the thing to pull back, although this pullback was small though, but for it to pull back a little before you jump into the sell. So once price touches the 50 EMA, we check the ADX. If the ADX remains above 25, it confirms that the trend is strong. It's still strong. So this is our entry trigger. Then for your stop loss and take profit, risk management is key. Here's how to protect your trade. You place your stop loss. If it's a buy trade, of course, price should be above the EMA. And then the ADX should confirm it by being above 25. So in that case, this was a good buy opportunity. You can see around here, right? You can see around here. Stop loss below the previous swing low. Take profits around key resistance zones or previous swing highs. So you place your stop loss below the previous swing low for a buy trade. Then for a sell trade, you place your stop loss above the previous swing high. All right. Then you take your profit at major resistance for a buy trade. Take your profit at major support for a sell trade based on the trend. Okay. It's very important. Now, here are a few tips to make this strategy even more effective. Remember that the ADX confirms trend strength, while the EMA confirms trend direction. So only trade when the ADX is above 25. Weak trends lead to fake signals. So make sure that the ADX has confirmed that that trend is strong before you jump in, to be on the safer side. Because if you jump into a trade when the ADX is below 20, it means that the market is likely consolidating. Like, look at what happened here. You can see this was a consolidation phase. So imagine if can you see, although at some points the ADX climbed up, representing a particular strength in a particular move. For example, now it shows that this particular move had some strength. You can see this particular move. But generally, this was a consolidation phase, right? So when you have a consolidation phase, generally, just stay out of the market. But when the trend resumes, you can jump in, looking for opportunities in the direction of the trend. It's important. And then try to use higher time frames to start your analysis, because this reduces market noise. When you do analysis on the higher time frames, the analysis are usually stronger and more trustworthy compared to those on the lower time frames. So once you have gotten your overall trend direction and key price levels and all of that, if you are a scalper or an intraday trader, you can then go back to the lower time frame to get precise entry points. There's nothing wrong with doing that. All right? Avoid sideways markets. Okay? I'm saying it again. For your own good. Now, this strategy works best in trending conditions. That's the reason why I have to emphasize that you should just stay away from ranging markets or sideways markets, okay? And then you have to ensure that you always observe good risk to reward ratios. You can see that here, I was aiming for risk to reward ratio of minimum of 1:2, minimum of 1:2, okay? So this was 1.95, but it's very close to 1:2. So just aim for risk to reward ratios of minimum of 1:2 to be on the safer side, okay? So even if you have equal number of wins and losses, you're still going to be on the winning side. So that is how you trade with the ADX and EMA strategy. This setup helps traders focus on strong trends and avoid weak market conditions. Meanwhile, do not also trade with an amount that you cannot afford to lose, okay? And try not to risk more than 2% of your account balance in a single trade for the purpose of risk management. All right, it's very important. If you found this video helpful, don't forget to like and subscribe for more powerful trading strategies. Let me know in the comments what strategy you'd like me to cover next. In the meantime, thank you for watching, and I'll see you in the next video. Happy trading.